Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hey traders, welcome back to another live stream. Hope you're all doing well. We are back in the building. We had a poker night here at the office. A lot of fun. I'm not a very good poker player, to be honest, but I enjoy it. It's fun. Well, I don't know. I'm not bad at poker. It just depends who I'm playing with. Last night, I didn't make any money. In fact, what I did was I handed out quarters to everyone in my office. So technically, the only person that could lose money was me, and I did that. So it was fun, though. We stuck around at the office, and probably a much needed team outing and just hanging out. We've been super busy. If you guys haven't seen all the content, it's been a very, very busy last couple weeks for us. Hope everybody's doing well. We've got a event coming up here in just 8 minutes or so. We've got the advanced GDP numbers coming out. Let me make sure I get that set up so that we can take a look. As we get started here, do me a favor, guys. Where are you tuning in from? Let me know in the chat. I'm just pulling up my my view here. We're going to pull up Forex Factory so I can take a closer look. So advanced GDP comes out in just a few minutes here. We got 6 minutes, 7 minutes to go. And this is, of course, also followed by our unemployment claims number, which will also be interesting. A couple things I'm watching for is to see, in terms of jobs numbers, so we're going to get a slow or a continuation of slowing, more files for unemployment, that sort of thing, showing a sign of potential slow in the jobs market, which the Federal Reserve is also sort of betting on in order to pause rate hikes. If unemployment declines, meaning more people, are employed, if that sort of thing, if jobs look healthy, it could cause the Federal Reserve to need to do more rate hiking, which we know would cause the dollar to be strong and cause other assets like gold and the S&P 500 to drop. Nigeria, Kenya, Belgium, Pakistan, Scotland, India, Venezuela, South Africa, Bonaire. Thank you guys, Sri Lanka. Good to see everybody from all over the globe as we get into today's numbers. We'll also be taking a look at several charts. I want to start out with my trades personally. I'm still in this S&P 500 trade. And guys, we had a crazy pop on one of my stock investments. I bought Meta this year. Actually, was it this year? I can't remember when it was this year, but I am floating a really good profit on Meta stock. We had last night, we had earnings from Meta. This is, of course, Facebook. I bought Facebook at almost perfect timing. I bought it in November of 2022. And to be honest, in terms of a stock trade, this is probably the best one on my list. Also, of course, other key stocks to note for the stock traders out there. I also own things like NVIDIA. I have a small position still open on NVIDIA. Microsoft yesterday, big pop. Why am I showing this to you guys if you're not stock traders? Well, some of you guys might be. For those of you who are not stock traders, this still matters because these companies are big for the index, especially when you're looking at something like, for example, NAS 100, right? If you're looking at NAS 100, what is the NAS 100? Well, the NAS 100 is, of course, a conglomerate of 100 tech stocks, right? Tech stocks being, of course, things like Microsoft and Meta. So it's really important to think about that when you're looking at the indices. If you trade the indices, which is, of course, one of my favorite things to trade, you have to pay attention to some degree the stocks that make up. Now, I'm not a huge individual stock trader. I have some investments in stocks. Like I told you, that Meta position is more of an investment. But I actively trade things like the S&P. What's up, Angeline? What's up, Lunday? Tyler in the chat. Forex. Maze Kinders. What's up? Goofy Peter. What's up? Good to see you. California, says Tyler. Sweet Meta. Yeah, I've owned Meta for, well, many years. I let go of it before it crashed, and I picked it up after the crash. So I'm feeling pretty good about Meta overall. Anyways, yeah, we're gonna be jumping into some charts here as we get into the GDP numbers and unemployment claims that come out today. Let's start with the dollar real quick. We're gonna rapid fire here a little bit before, and then we'll follow up the actual event with some commentary. Now, we're looking at the US dollar here, and the US dollar, notably, I'm gonna fix my hair. I'm not sure what's going on this morning. Notably, looking at the dollar tried to rally here a little bit. And part of this was there was some fears around the First Republic Bank situation. Is the bank collapse an isolated event, or is this something that is bigger? Well, we see yields, with the First Republic Bank situation. This is a 4-hour chart. We saw some volatility there, yields dropping, bonds jumping. As bank collapses, guys, if you think, this is why when we talk markets, I try and give you guys a full picture. We can't just look at currencies. We can't just look at gold. We can't just look at the indices. They all talk. So, for example, one of the reasons the dollar moved was because of this situation with First Republic Bank. I'm sure many of you guys have heard about banks collapsing here in the United States, right? Now, it hasn't been a lot of them. In fact, it's been a couple notable ones. And the market is trying to figure out if these are isolated events, if they're just poorly run companies, or if this is a bigger banking problem that could spread all throughout banks. And of course, if that happens, why does that matter to currencies, indices, and gold traders? Well, because if the Fed starts seeing more bank collapses, it's very likely that they will stop raising rates so quickly, which could cause the dollar to plummet. Why? Because again, when rates are going up, when rate hikes are happening, it tends to be a positive thing for the US dollar. Well, we have right now the expectation for May. In fact, we've got just a little bit here. Let me make sure I'm good on time. We've got to watch the news event We've got a minute and a half. So maybe I'll come back to the point about rate hikes in a moment. Let's set up here, guys, for the event. We're going to be watching GDP numbers, and I'm going to give you some take on this and see if we can find some trades. Again, I am long on the S&P. Let me pull up my SPY trade just so we have it on deck so that we can watch it together. So we'll come back to the the spider trade in just a second. Let's pull up a couple charts here. We've got about 1 minute to go before we have our breaking news. So we're going to pull up dollar. What is with my charts? What is going on here? I don't know why it has all the wrong themes set up. So I'm going to put gold in the bottom left. We'll put our classic 15-minute charts here. So 15-minute chart here, dollars in the top left, gold bottom left. Let's put our dark here, 15-minute. I'm going to put S&P on the top right here. And we've got our breaking news here happening in just a moment, guys. I'm going to put the pound up here. In fact, what we'll do with the dollars, we'll put the euro dollar top left. All right, guys. So we're coming into the event here. We've got about 20 seconds, and I'll give you my take on some of this stuff. After we get the numbers, we'll sort of digest them, try to figure out the hair situation. I don't know why I have like a couple strands that just decide to not, maybe I just buzz it all off. I don't know. Anyways, here we go, guys. We got 10 seconds before the event news. Could cause some spikes, could not cause some spikes. We'll see what the number comes out to be, and we'll interpret it here live for you. All right, gold. Gold, look at that. Gold jumping here now. GDP numbers came out. Wow, look at the spike in gold. That's a huge range on the price of gold. That was a $11 per ounce range that we just traded through. We shot down, we shot back up, and now we are sort of trading somewhere in between on the gold market. The pound selling off, showing some dollar strength here this morning, possibly stronger than expected economic numbers. Let's go have a look at what's going on here. So we got unemployment claims came out better than expected in terms of people filing for unemployment. That was less than expected. We had 230K. This would, of course, be dollar positive. Now, when we're talking USD, US dollar positive. Advanced GDP came out 4% higher than expected. And then, quarter over quarter, we had a significant decline in advanced GDP. Hold on. What's going on here? Let's go get our full screen on, and we'll see what's happening to some of these individuals. So here's the dollar here trading up on this news. Let's get our 4-hour chart. Not a massive spike, but still a spike nonetheless. We saw some volatility, and this is new information that we could use to pay attention to. So let's take a look at this. Amar FX, are you come on. Are we self-promoting in the chat? The producer's getting on to you. When the producer's getting on to you, the producers are very nice guys. So if they're getting on to you, you probably did something to make them upset. They're very nice guys. They're nicer than I am. So they got to be really nice. They're nicer than me, right? Anyways, let's dive into some of these numbers here. So in terms of unemployment claims, we had less than expected. Of course, we were forecasting 247. This is a less than expected number that came out here in front of us. And then, of course, the advanced GDP quarter over quarter slowed. 1.1% growth compared to the 2.0% growth. Of course, advanced GDP, this is, while this is Q over Q data, it's reported in an annualized format, quarterly change times 4. There are 3 variations. It's the broadest measure of economic activity and the primary gauge of the economy's health. So again, when we are talking U.S. economy, if the U.S. economy is in fact slowing, would that not be somewhat gold bullish? I'm a little bit confused here, guys. Again, to be completely honest, the spike was not too strong one way or the other, and it seems that we had a little bit of impacting. Let's talk U.S. dollar for a second, guys, on this news. So in terms of unemployment, we saw what happened. So unemployment came out, less filed for unemployment. That is, of course, dollar bullish. And then, of course, GDP came out less than expected. This would be for USD dollar bearish. So when we look at the dollar price, we see the reaction here. We don't see a massive spike one way or the other. We see sort of an indecision candle. We saw a spike down and a spike back up. We're about break even to the candle. So, not a massive one-sided news event, but still interesting nonetheless. In fact, in my personal opinion, the economy showing signs of weakness is potentially bullish for gold. It does call into question the S&P 500 a little bit, in the sense that, hey, if the economy is slowing, stock earnings could suffer in the next round of earnings report. But although so far we've seen stock earnings be okay, I'm still long S&P in terms of trades that I'm in. This has brought my trade back to about break even recently. We had really strong earnings from Microsoft and from Meta also reported very, very strong. We also have good earnings from Google, Visa. I mean, to me, I'm willing to hold my S&P 500 trade for the time being, but I'm also very curious to see if we can get a pop on gold. Any pop on gold to the upside, I will entertain for possible longs. I put this out on my Twitter a couple times, but trade setups for me right now, I'm looking for breaks, retests, continuations, right? Up to like 2045. I'm interested in that breakout continuation pattern. Yeah. So yeah, that's kind of what I'm paying attention to. 2010 is the breakout zone that I would watch for, right? If you get a break outside of this range, would be very interested to see if that turns into something more. And I've said that for a little while here now. To be honest, I probably sound like a broken record to the regulars. I keep saying this about gold, but it is one of the trades that I'm watching for. And this is trading, right? Trading 101 is like waiting for a break, waiting for a move, waiting for some level of excitement. Interesting to see that gold is really sort of reacting negatively to this. Dollar strength coming in. In my personal opinion, I'm not a super fan of getting long the dollar here. Again, we had some better than expected. What is this? So advanced GDP price index quarter over quarter. Broadest measure of price index. Okay. So broadest measure of inflation encompassing all activities, included in GDP, and is a primary instrument that the central bank uses to assess inflation. So this may be part of the bull case for the dollar here today, is we're getting 4.0% on the advanced GDP price index, which is somewhat a measurement of inflation. So the dollar strengthening here. Still, in my opinion, price charts look really good for sells, not necessarily on the dollar. Let's take a look at like the euro dollar. So euro dollar, for those of you who are watching euro, we've struggled to stay above, or even to really maintain above 1.105. So you can see we had resistance here, resistance here, resistance here, resistance here, and now price reacting negatively to the day. Similar to gold, I'm not necessarily bullish on the euro. Like I don't want to trade euro dollar per se, but if it were to break, I would say that it has room to continue. So breaks and retests could be something of interest. Same thing with the pound. The pound, very similar story, in my opinion. If we get momentum to actually get us above, but you need strength, like you need a real push, because right now what I'm finding with a lot of currency pairs is that you just have a lot of chop, a lot of like indecision, and probably a lot of that is waiting for the May 3rd meeting, which will give us some strong decisive moves in terms of dollar pairs. Thoughts on oil? I don't really trade oil too much myself. It looks like it's really, the chart looks really ugly, right? It looks very bearish. It filled this gap here, notably. Filled the gap. The problem is it didn't react very well to filling the gap, didn't start to rise. It, in fact, fell through the gap open spot, right? If you know anything about gaps, generally speaking, what happens many times is that once price starts to fill the gap, it usually will go to the fill the gap. And in many cases, as you can see on this candle here, you do often see some reaction to the gap open, right? We call this like the gap open spot, right? The gap open is where it it's very rare for especially in the futures and forex market to get significant gaps, but we did in fact get that. This was on news that OPEC supply was being cut, so it caused a giant jump in this. Now we're seeing, however, some hawkishness from central banks. I would say that if you are looking at potential China reopenings, continuing that story, my opinion, I think there's some bullish case for oil, but from a price action standpoint, this thing tends to trend very strongly when it does. So I'd be looking for breakouts. I don't really have much of an opinion on oil at this time. It's pretty back and forth, but I'd be intrigued if it catches some sort of bid that breaks us outside of these previous highs. I need sort of like a range expansion in order to actually look for break and retest opportunities. So that's kind of what I'm at with that. VIX going up. What's going on with the VIX here this morning? VIX has been trading very, very low volatility, signaling that, again, market volatility has been low. Last time we had a really big pop was in March when we had some fears there. So, yeah. Nick, why are you always bullish? Where else structure shall? I'm not always bullish. There are times where I'm bearish on things. Right now, lately, I have been very bullish, but again, that doesn't mean I'm always bullish. Just lately, I've been bullish on things like, for example, gold, S&P. I would say right now, what I'm most bullish on would be the gold market. I'm looking for a pop, breakouts, any sort of retests. That would be my primary trade right now. So I will watch for that opportunity on gold for the remainder of this week. Remember to like the stream. If you have not already, smash that like button, support the content, support the stream. We have very low likes in the building. Help us out, help support the content. Guys, real quick, we're going to take a quick break. While we take a break to do a commercial, let me ask you to just like the stream. Let's roll a quick commercial for the Discord, if you will, Chandler. Let's try that out. Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show. And speaking of the Discord, this is where I've got my trade. Like I said, if I take gold, you guys will see it inside of the Discord channel. It's under the Nick's Trades section. I also, I've been doing something recently. I've kept it on the low. For those of you who are already members with us, you may have noticed I've also been doing some positional trading. This is longer term stuff. This is longer term positioning that I have. I have some trades open, and most of this is tracking smart money. I'm not sure why we have some unfinished text here, but I have two trades open here as well. So currently I am long Euro Swiss as of a little bit ago, and also dollar yen yesterday. Was it yesterday? 2 days ago, I picked up dollar yen. Now these are longer term positional trades. Let's have a look at those and see how things are going. And we can actually pull it up in our Webull account, which is so cool that they have currencies. I picked up Euro Swiss on a longer term. Now this might not make any sense because it's very different to my traditional trend following strategy. Why, Nick, would you possibly be long Euro Swiss franc? Now, again, I shared this trade inside of the group, dollar yen and Euro Swiss franc. In terms of momentum trading, these ones don't match up with my momentum strategy. The TTF methodology, which I talk about often, the true trend following concept that I use every day in my momentum trading. For example, my S&P trade, or, if I'm trading gold, those are more of our short term. Well, this one, I want to showcase this newer, or not newer strategy, but this strategy that I talk less often about involves more sort of building positions over time. And currently, if we pull up the Edge Finder, I want to show you why on a longer term basis from a swing trading perspective, like a, hold positions kind of perspective, I have a long trade on this pair, Euro Swiss franc. And the reality of it is it's very little to do with technical analysis. I just want to talk about it for those of you who are viewers of if you're already in the Discord channel, this is some interesting stuff here to talk about. So if the Edge Finder would load, it's having a slow morning. Usually I loaded it before the stream because it sometimes takes a minute to warm up. So in terms of the smart money tracker here, guys, here's something kind of cool. So when we look at the currencies here listed, what you'll notice is that you have the euro as a very heavy favorite from institutional buyers. Now this blue and red, what this is showing is the ratio of long to short positions that institutional traders have right now, according to the COT report. If you guys do not have access to this, we're going to drop a link in the chat real quick where you can request access to the Edge Finder, which gets you access to our COT report data, that sort of thing. So click this link if you'd like to ask for the Edge Finder. Click there. We are literally at the end of our 1-year celebration sale. Do not miss the last chance to get access to this for 40% off because it's going away and you will not be able to get access to that for such a low price again. So if you've been thinking about it, take advantage, don't miss it. And again, there's how to do it. Anyways, the reason that I am personally long Euro Swiss, which is, again, not a trend following concept at all. It is actually following a different type of trend. It's following what big money is doing. Euro Swiss franc so the euro is very long by institutional traders and the Swiss is very short by institutional traders. So I have a Euro Swiss long, buying the euro along with big money, shorting the Swiss franc along with big money. Same with the dollar yen. Dollar, very long. Well, not very, but 63% enough long. Yen, notably though, very, very short. 82% short ratio shows a heavy preference from big money to be on the short side of this trade. So that's part of the reason why I have that. So dollar yen, longer term, sort of as a swing, which would be interesting because it's in some ways exposed to, if this market has a run up, it would probably be in correlation to bond yields spiking, which is a little bit different than my S&P trade, somewhat of a hedge in some ways. Anyways, let's keep going. We'll take a look at some more charts here today. I mentioned gold. Let's see an updated where we at with this one. Let's take a look at the 1-hour chart. And again, we are staying in the range. We seem to not be able to break out one way or the other on this gold chart. Support holding here very well around 1975, but resistance stubborn around that 2010 mark. I've mentioned several times here, even today, that if this is able to get a breakout on the 4-hour chart, I'm looking for a long. So meaning if it breaks out here, now that's a ways away. So this is sort of just a watch list item for me right now. It's not pressing. We're not trending up yet. So I'm trying to avoid this, right? This is just messy choppiness for the gold market. I love trading gold, but I need it to be trending well. When gold starts doing this nonsense, I don't like to do that. I don't like to trade that nearly as much as when it's clean flow, right? When it's just going one direction, very nicely trending. That's where I tend to have my more profitable positions when something like that. Should you hold your trades during news? It very much depends on your style. I'm a swing trader, so I often do end up holding through news events because otherwise I'd be closing all the time and I would just become a day trader, right? You can't really be a swing trader and close for all the news events because then you just end up closing things every day because there's news events almost every day. Anyways, guys, we're going to take a quick break. We're going to hear from one of our sponsors here in just a moment. So we're going to let James take that away. Let's hear from James now.
Yeah, guys. So if you are looking to get funded, we have the solution for you. Our partnered prop firm, Superfunded, helps traders get access to up to $200,000 in trading capital. The reason we chose Superfunded is because they offer great reasonable challenge rules, a 90% profit share, and up to a 1-to-30 leverage, and more. For a limited time offer, get 10% off any of their account challenges with code A1 Trading. That's 10% off any of their account challenges. They have different account exams that you can take for different account sizes. Again, they go all the way up to $200,000, but you can get smaller accounts for a little bit less of an examination fee. But no matter which exam you decide to go with, you can get 10% off that examination fee when you use the discount code A1 Trading. So if you're interested in this offer, click the link down in the description below right now. Back to the show.
Thank you for that, James. And yes, make sure to check out Super Funded if you guys are looking for a funding program. I'm back on my S&P trade, which is still just at break even. But guys, I barely avoided getting stopped out of this S&P trade. You can see my stop loss here was just below structure. It was cool to see, this is one of the reasons why I use both fundamental and technical analysis. Earnings have been pretty good in the United States so far. Yesterday, in case I know not a lot of us here are stock traders, I do some stock trading and investing on the side as well. But we had some interesting names. I mentioned this earlier yesterday. Look at this pop on Meta stock. This was, of course, Facebook, Instagram. We all know it. Some of us love it. Some of us do not love it. Regardless, though, Meta popped tremendously here after hours with their earnings coming out really, really hot. But they weren't the only one. We also had Microsoft, and you could see Microsoft popped huge with excellent revenue, earnings per share, really, really good stuff there as well. We also had Visa, a stock that I personally do not own. If it would load, hold on. Visa. That was weird. Visa also had pretty good earnings. You also had Google, which I do own. Google stock flew here on the after hours yesterday, or I'm sorry, 2 days ago. Has since given back a little bit of those gains. The point I'm showing that for you guys here, the reason why is because that is actually impacting a very interesting trade as well, which is the NASDAQ. And Frank made a good point here on one of our recent shows. He pointed out that the NASDAQ is, in terms of institutional positioning, of the three US majors, the S&P, the Dow, and the NASDAQ, for those of you who trade them, this is notable. The NASDAQ is the most bullish, still not overwhelmingly bullish by hedge funds, institutions. They're not necessarily super interested, but still at 51%, there's a good ratio here compared to, the S&P, which goes against my positioning. In fact, I mentioned to Frank, I of course, in hindsight, am wishing that I had actually taken the NASDAQ trade when I took the S&P. Most of the time they move similarly anyways. But again, extra contributing factors with tech stocks being very strong in after hours earnings has the NASDAQ trading a little bit better, outperforming the S&P and the Dow at this time. So I'll be watching for potentially chances to add to a NASDAQ trade. Those are ideas that I'm looking for in terms of price action on the NASDAQ. Let's take a closer look here. This is your 4-hour chart where, again, and let's actually start daily chart here. So the NASDAQ, interestingly, came back on the daily to a key zone of support, right? So we've got this area here. And notice how price came down and just barely tapped this area and found a lot of support, right? Shot off of those lows. So now what's interesting is that, we're probably not at a point where I would want to buy it. Of course, in hindsight, the trade was down here. And in fact, if you were here with us yesterday, Frank mentioned, or actually, I believe he even got long NASDAQ when we sort of doubled back midstream. He jumped into some trades there. So he's got some a trade on with the NASDAQ. I have a trade on the S&P. And I think that, this NASDAQ has a lot of promise because, again, tech stocks are showing strong earnings so far. We've seen some really good. And of course, with the big names showing up, it's interesting to see how strong the NAS is here today. So NAS traders looking happy here on the long side. One key notable thing is, of course, if we can get back to the highs and break them, that'll be another a very pivotal spot as well. You have supply around 13,150. If price is able to break through those highs, should be a very interesting sort of opportunity, in my view, to potentially add or get into the NASDAQ myself. So it's a trade I'm looking for. So yeah. Let's take a look quickly. We have some people asking about Aussie pairs here. The Australian dollar traded lower here recently. We talked about this yesterday with CPI numbers coming out for Australia less than expected, meaning inflation declined year over year more than what was expected in terms of forecasts, and it put some weight on the Australian dollar. We talked about interest rates briefly, and we got separated from that topic. Let me pull up interest rates here. When we're talking interest rates, guys, especially if you're for the currency traders in the building, interest rates are important because higher interest rates generally are more attractive for a currency. Now, what I mean by that is that you guys may have noticed that in 2022, we had a massive increase in interest rates in the United States. In fact, during that time, interest rates, in fact, let's look at this. We could take a look specifically. Let's reduce our number of things here. We're going to just go, let's just do euro here for a second. There we go. Okay. So we're looking at, sorry, let me add the euro here. I'm not sure what's going on with it. We've got some errors on the euro here. We'll have to look into that. This is the reality being a software company is constant bug fixing and stuff like that. Anyways, when we look at the interest rates here, we're looking at interest rates globally. What we see here is that interest rates rose, as early as, early 2022, we started to see this spike up. And the US led that charge. We got up to 5% at the fastest pace. I think the only other contender was the New Zealand dollar or the New Zealand economy, which is now slightly above the US at 5.25%. The point is, higher interest rates are usually attractive for the currency. Well, now you may say the US dollar is trading down now. Why is that? Well, it's because now forecasts, if we go to the Fed tracker, we use the Fed tracker to look forward. The Fed tracker will show us that forecasts for the interest rates are actually sort of expected to plateau and potentially even start to decline. Some analysts are even thinking that in the later half of 2023, we could see rate cuts. So it's an interesting thing in terms of the currency. That's why the markets are forecasting for a weaker dollar. Despite that, though, the Australian dollar looks weaker. We had lower levels of inflation. And as we mentioned, in terms of interest rates are lower in Australia than in the US. So when we compare this to this, we can actually go take a look at the full page, get a signal on the Australian dollar here across the board. And what we'll notice is that we get on the Edge Finder a strong sell reading. Why is this? Well, again, you can see the score breakdown here if you guys want to take a closer look for the Aussie friends in the audience or people who are trading the Australian dollar. Economic numbers favor the US dollar here. Despite the US dollar also being weak, the weaker of the two, I would argue, is the Australian dollar. GDP growth is higher in the US. We had our most recent numbers just come out, 1.1%, still better than the Australian GDP growth. So this is economic growth better in the US. Inflation, more under control in the US. Unemployment, even. Interest rates, more attractive in the US. The US dollar is the favorite on economic numbers standpoint, but that's not all. We take a look at COT data. We track, when we talk trading setups, we take into account, of course, economic numbers, but we also look at the long and short percentages on institutional money. And right now, what we see here is that institutional money favors the US dollar heavily. They're very short the Australian dollar and very long the US dollar. Meanwhile, what does retail do? Well, retail sentiment shows 86% long ratio, meaning that retail traders, they're betting in favor of the Australian dollar. All of these things combined give me a very bearish outlook when looking at the Australian dollar against the US dollar. So I know that was a long-winded answer, but this is when we talk trading, when we talk setups, I like to have a full look at something before I make a decision as to whether or not to buy or sell something. So in my opinion, and again, I can be wrong, my opinion is I like the idea of shorting the Australian dollar if it does rally up into this area, but I probably wouldn't, I wouldn't rush anything before then. Frank made a point yesterday. He was a little bit more aggressive on the Australian dollar. He's not here on the stream right now, obviously, but yesterday he was, and he mentioned that he liked the idea of possibly selling this 38.2. Had you gotten anywhere near it yesterday? In fact, let's see, did we hit the 38.2? We did. Look at this, guys. Perfect. Like to the pip. I don't know if Frank is in that trade or not, but this thing beautifully came to that 38.2% retracement and sold off. So we were bearish yesterday, both Frank, myself, and I think Tom was also bearish. He came on the show and was pointing out his bearish thesis. So Australian dollar overall, very bearish. Aussie inflation is not 7%. You're right. You're right about that. It's 6.3% year over year. And that is a good question. It is possible that we have some lag in our data feed. Again, we're not a Microsoft. We're not a Google. We're a small company. So when it comes to building our tools, we are doing our absolute best. There's only 3 of us that work on the development side to build the software that we use. So, at some point we hope to hire more people, but of course those have lots of costs. Anyways, yeah, you're right. We need to look into this in terms of Australian numbers. I'm going to send a message right now to the developer. Should be 6.3%, but it is showing 7.0%. Okay. Thank you guys for that, by the way. Edge Finder is a lagging indicator. Here's the thing about the Edge Finder. The Edge Finder, what it does is it looks into all these contributing factors and gives a general bias. It's not a real time. If you're looking for something to like trade news spikes, this is absolutely not the tool for you. It is a fundamental bias builder, and it's been an incredible tool for myself using it, and also for the many people who are using it. It's an incredibly resourceful tool. It does have its flaws. I wouldn't, stand here and say it's perfect, because we're constantly working on it. There's several people who are, so I wouldn't say it's not. But real quick, we've got Frank in the building. Frank, we can bring him in and say hello to Frank. Give it what they want. Hey, Frank, what's up?
Hey, how's it going?
Good, good. Hey, did you see that? I don't know if you saw what I was talking about here just a minute ago. This Australian dollar, you remember yesterday we talked about it a little bit?
Right. The limited upside.
Look at this. It came up to that 38.2% and just said hello, and then it dropped. Like you mentioned that yesterday.
Yeah.
Remember that you mentioned the 38.2? Of course, I'm kicking myself because I wish I'm in that trade, but it came to the pip just before dropping.
Wow. It did. That's almost a perfect setup. Missed that though.
Yeah. Are you watching any currency pairs right now?
So far, no. I'm looking at gold.
Okay.
I still, after the GDP news that came out, I was I had like a bullish bias towards gold, but it doesn't look like it wants to move that way. So I'm still watching to see where it's going to go. But on the daily chart, it looks like we still got that head and shoulders pattern. Well,
and it seems like, Frank, that the GDP numbers, they came out and they were much weaker than expected. We were expecting 2%. We got 1.1. And I've been saying for a while that I would think that some level of a drop in GDP could be a bullish case for the gold market. And it still might be. We might have just seen some volatility here on the spike. My take on it personally, I mentioned it earlier, would be if we get that break of 2010, I'm bullish. But right now, we just stay stuck in this range and we're not going anywhere. So until it breaks, I'm probably not interested. So are you actually looking at a potential short trade if we break out, or do you have any short ideas on gold?
Yeah, so I would say you're looking for a break at 2010, but I'm kind of looking at a retest, from like 2003 or 4 to 2010. And I don't know, I think I like the short side.
So you're sort of more interested in trading that rebound range kind of concept?
Yeah, because I think it looks like, at least from a technical standpoint, that it wants to complete this move.
Yeah.
And it's really got some weak upside. So I think at least if it were to, retest the 2050s or 60s again, it's going to have to come down, test the 1950s or even the trend line on this daily chart. So
yeah, well, to your point about gold specifically in terms of this zone, that 2004 to 2010 mark, had you been a seller anytime in the last few weeks, you'd be making some good money off that. So I can't really argue with that. like I said, the only way I'm actually able to probably justify getting into a long trade would be if that were to sort of break through, which again, it's been trying for a while. So we'll see. It's still
Yeah.
kind of choppy and range bound for now. Do you have any thoughts on this
And
dollar move?
so
Sorry, were you going to say something else about
I
gold?
was going to say about gold, that's still majority long when you look at the smart money tracker, but it looks like they're starting to shift. You know, they're reducing their long contracts and increasing the shorts. So it looks like, what was it? Was it 80%, 81% last week or something? Looks like it's dropping some. So I think, you know, if this continues, I'm not gonna try to trade against smart money.
Sure. Yeah, it'll be interesting to watch how that transitions over time. We've got some cool new tools coming out for the COT report stuff. For those of you guys who are Edgefinder users already, keep an eye on that. We've got some cool features that Frank and I are working on. I'm excited to get those out. We're going to be doing some. We've been heavily requested many times to get historically what COT data is looking like, and Frank and I are building charts that sort of look like this so that you can see historically what the COT report has done week to week. Because like what Frank just mentioned, Frank is pointing out, I've got it pulled up here, an increase in short positions recently and a slight decline in long positions on the gold market. Still a heavy preference for the long side, but a shift perhaps. So seeing that over time plotted on a chart might be some cool information, which we'll have for Edgefinder users pretty soon. Remember, guys, our sale is ending. We'll drop that link. If you do not have access to it, click this link right here. Direct message us. Someone on our team can get you hooked up with the Edgefinder for its biggest discount of the year. Frank, I want to ask your thoughts real quick on the dollar, and then we'll bring in Miko here next.
So I actually took a dollar trade yesterday. I bought USD CAD on the
USD CAD, yeah,
on the 1-day chart. So it touched higher and then came back. So I'm just holding it in this range. I got stops below the yesterday's lows, so just trying to ride it out. I saw that it became a strong buy on the Edgefinder, so I used that to help me get in. And
gotcha. Yep.
The
strong
trend is
CSU
just strong
report there. The Canadian dollar, like really weak in terms of go back to that smart money tracker just for a second. We got CAD as the second most shorted currency compared to that very strong, still stubbornly strong. You know, Frank, I will say the dollar is still heavily long overall, but it's creeped from it used to have first place prize in terms of most long, but I'm still with you on shorting the Canadian dollar. That seems to be I like that trade, especially, I mean, you look at this chart, that's a really strong uptrend here. So you said stops below here. Are you targeting something, or are you trying to trail stops on this?
No, I'm just trailing it like usual.
Cool.
But yeah, it also partly had to do with GDP coming out tomorrow. And analysts are, at least the forecasts say, it's kind of a significant drop from last month. So looking at that too, and probably the anticipation around like a lower GDP or contraction in the economy.
Cool. Frank, you have a fan in the chat. Fanique says, "Hey Frank, happy to see you." Good to see you too, Fanique. Thank you. Thank you for not including me in that message. Saying hello to Frank.
Hey Fanique,
just
how are
kidding.
you?
Yeah, Frank, stick on with us for a minute. We'll say hello to Miko. We'll bring him in. And Miko, what's going on, man?
Unfortunately, I can't hear you guys. I'm still having difficulties with my audio. So I can only speak, but I can't lip read too well.
Okay, Frank,
Apologies.
you and I can back out. We'll just give Miko the floor and let him take over.
Okay.
All right, I'm gonna exit.
I'm gonna take over. Yeah, much appreciated. What's up, everyone? Hope everyone's doing good. Yeah, having some problems with my sound for some reason, which I need to sort out. But looks like you can hear me fine. So, like always, I'll go through the pairs I'm looking at trading towards the end of the week, and obviously going into next week as well. If there's particular pairs you guys are interested in, feel free to leave it down in the comment section, and yeah, we'll take a deep dive into them. But I'm currently in one position, which is on dollar yen, USD JPY. Yeah, we had some news today, and the market's been a little bit crazy for USD JPY. I've been in 2 trades this week. Both have been very, very like chaotic in terms of the wicks and price moving, especially in terms of news as well. But yeah, I hopped into USD JPY yesterday around 5 p.m. UK time. Sat in the trade, hasn't really done too much since I got in. In some drawdown a few times, been in and out of drawdown, and then yeah, I finished my stream early today. Big dump to the downside for USD JPY, and then obviously the news kicked in, and price started pushing to the upside as well. So I'm just slightly in profit for this dollar yen position. I'm still looking at a lot more upside for it. Again, if the technicals play out, I'm looking for pushing to 135, 135 on the dot. Basically, that's my first take profit. I have another one around 136, and my final one at 137,500. So I'm looking for this overall uptrend to continue for USD JPY. Really nice pullbacks for this one. Still seeing good momentum in the market. Quite correct for the pullback. I'm looking at this being a bull flag, looking for the next impulse to the upside, and now coming back into the trend line for the high low, and also to a very nice 0.618 on the fib there. So I had some really nice confluences to get into this position. And yeah, looking for a move to the upside, and looks like the dollar news has, or at least the dollar reaction to the news has favored the trade. So we'll see how this one plays out. I'm bullish on the pair, and I'm looking for more upside for this one. And I was in gold earlier this week as well, and this one was just as chaotic as well. Similar analysis, again, price getting to a nice area of confluence. Looking for a bounce to the upside. I'm still quite bullish on gold. Looking for price to come back to the prior highs around 2040 or slightly above 2040. And then we've got the all-time highs not too far above, around 2075. So I'm still looking at dollar weakness in comparison to gold. So I'm still favoring gold going higher. So I was in some longs around here at the start of the week, and as you can see, wicks galore, in and out of profit many times. Price came and hit my first target around here, then took me out of the trade for break even not too long after as well. So a very similar type of trades here with USD JPY gold, which is quite interesting. But yeah, I hope everyone's doing good. I've got some pairs I'll go through as the USD shorts, AUSD shorts as well as the JPY shorts. I'm also looking at Euro CHF shorts, and those are the main pairs I'm looking at for the rest of the week. I'll quickly go through them. Any pairs you guys are looking at, drop in the chat. Finike, is that how you pronounce it? What is up? Hope you're doing good. Good to see you as well. Winfred, what is up? Gold, CHF, JPY. We'll take a look at Euro USD as well. Moch, what is up? Hope you're doing good. Welcome back. That's 2 streams in a day. Called the JPY trade and sold early because I got nerves. Yeah, I mean, that's a big part of trading. The emotional side of things. Anyway, so yeah, I just did gold. So basically, I did my trade in gold, but the analysis for gold is what I'm looking at going forward, which is a breaking test of the highs, which is what I saw. Very similar to Nick. He's looking for a breaking test of the high of 2010, and that's also where my interest lies as well, because trading in this area is just very choppy. Again, I got into the market a little bit earlier before it started to get quite messy, and then yeah, it really did get quite messy. So I still do favor gold breaking to the upside. We're still printing these high lows, so structure hasn't really broken yet. If gold suddenly crashes to the downside like this and we break through these lows here, then I'll be sitting on my hands for gold and become a little bit more neutral. We might actually be forming a bit of a downtrend here. So the break and retest of this zone here becomes very attractive for some shorts. And you start taking that trade to the downside. It might be short term because I still do think gold will reach those all-time highs again. But it might want to take a dive first before we do that. So if we do start bleeding to the downside, keep an eye on 1976. If we can break through that, retest that zone, that looks like a great area to short from. You've got a lot of wicks into the zone here. So if we can manage to break through, we should see a decent retest to continue that short. And the same thing to the upside as well. Break above 2010, that's where you want to be getting involved in. And we've got a nice target to aim for there as well. Clean and simple, back to the prior highs. Nothing too complicated. But yeah, anything in here is just a big no-no for me for gold. So yeah, gold's bullish bias, but I'm open to the shorts because that is a good opportunity. And again, I'm a price action technical trader, so if I get a decent opportunity, I'm looking to take it 9 times out of 10. So yeah, gold, that's what I'm eyeing up. As the USD, I'm looking at shorts for this one. It's a little bit corrective, so I'm asking if as the USD can retrace a little bit higher for me. It's kind of moving very, very choppy in this corrective bearish channel. We've got the lows not too far away, which is at this support level here as well. I'm looking for us to go and probably take out the lows there, at least have a test of that support. But we've got these major lower highs, which are looking very, very tidy. So we've got one over there, second one over there. I'm looking for a third one coming to this area here as well. So if you can have a pop to the upside coming to this area, I'm looking at the market rolling over to the downside. So the plan for USD is looking for some shorts around this area. We've got a lovely level of resistance as well. We've got a nice Fibonacci, I think the 50% of the fib from the low to the high. 50, 0.618 in that vicinity. So yeah, the way I'm looking at the USD, shorts look good, but again, lower time frames are still kind of correctly moving to the downside, so we might not get that pop there. It depends. We could just sell off right now potentially. I don't know what dollar's doing. Dollars are very, very strong right now as well. So if that keeps up, maybe USD won't see that bigger pullback. All I know is that, you know, as a trader, that's where my area of value is. So that's why I'm waiting to short the pair. And quite frankly, the risk reward from a sell to here, down there, unless you're on the lower time frames, is not going to be too appetizing for myself. So looking at a bigger pullback there, friends, the USD, but short bias 100%. AUD as well, short bias as well for this one. I'm looking for a deeper pullback. Seems that again, I'm breaking me test the zone here. Looking to see if we can get a pullback into this area here for AUD. Lovely area there, 0.66728. Looking to see if we can get a pullback into that area. We've got one drive over here. We've got a second drive there. I'm looking for a third one into this area. Again, same confluence, lovely Fibonacci. Actually, not quite the Fibonacci there. 50% is just slightly above. Might tag into it anyway, but same area and looking for a push into the lows here. I'm looking at AUD having a big kind of just counter trend move here. Just a big pullback, big consolidation, build up of orders. And I'm looking for kind of a big release of that to the downside and see the bigger trend continue. Big impulse to the downside, kind of a big consolidation, big correction, market building up. Now I'm looking at another follow through to the downside, and maybe long term we could be ending up at these lows. Again, fundamentals will have a lot to say about that, because if that move is going to happen, we need to see some dollar strength. And quite frankly, DXY is still printing in lower lows and lower highs, as we can see. So 1, 2, 3, 4. Even if you go back up here, you can see the market's still printing lower highs. The market's still in a comfortable downtrend. But if we can start breaking through some key structure, that's when we start raising questions, and that's when I probably start becoming a lot more bullish on the dollar. I know I'm buying USD JPY, but I'm exclusively focusing on the USD JPY chart and not really trying to add too much to it. But if the DXY can break through the highs, then yeah, I'll start favoring buys. But at the moment, the market still consists of the lower highs, so I've got to favor some downside. So we'll see how that develops, because the news is kind of still reacting. I mean, the price is still kind of reacting to the news. I'll probably wait for maybe the 4H candle to close at 6 to see how things really shape up, because we still could pull back from this zone here, or maybe we break through. So we'll see how this 4H candle closes and get a better picture to see how the market reacts to the news. But yeah, we are definitely see some dollar strength. Okay, let me go through some pairs here. I'm seeing Euro USD. We'll take a look at that. £1 USD as well. Being profitable, 5K on paper trading account. You think I should put in real money now? That's a question that I mean, yes, but paper trading is very, very different to live trading, and that's why people are very consistent in demo accounts and paper trading accounts, because there's no real attachment to the money, which is a big driver why people fail in the actual live capital, because there's attachment to the money. So you're going to be emotional about your decision making. So, but to be fair, if you're going to make it as a trader, you need to be able to trade on live capital. So yeah, if you're seeing some good consistency, that means the technicals or whatever you're using to trade is seeing some progress and seeing some results. So now it's time to apply that to the live markets. But a big suggestion would be make sure you're using money you could lose. So worst case scenario, if you do blow the account, it's not going to affect you too much financially. So yeah, don't put anything you can't risk, because it's still early doors if you're just moving from paper trading. But yeah, you can keep practicing as well. I would say do both. Have a live account so you're retesting the waters with actual money, and keep testing, keep learning, improving with your strategy as well. Okay, let's take a look at the S&P as well. So we'll go for Euro USD. I'm seeing pound USD, and we'll go for S&P. So Euro USD, we'll take a look. That one's probably heading down. Yeah, seeing some downside there because obviously your DXY seeing some strength. Again, Euro USD is still in a comfortable uptrend. I know it's starting to show some signs of running out of juice. We can see we're failing at the highs there. Big rejection at the high 1, 2, and now 3. So the market is obviously struggling to break highs. Quite frankly, it's kind of squeezing in this kind of triangular pattern here with the higher lows and the equal highs. So kind of doing a bit of this type of pattern, which is just a pattern of price building up and get ready for a breakout. Sometimes we see market break to the upside and we get the follow through. Sometimes we break to the downside and we get the reversal. That's up to Euro USD. But the way I'm looking at Euro USD right now is anything in this area is no trade zone for me, because it's very, very speculative and the market's trading at some important highs on the daily time frame. I don't really want to be looking to buy the market here. We got a solid uptrend on the lower time frames, but I don't want to be looking to buy into that daily resistance. And at the same time, I also don't want to be selling directly into this trend line with all these higher lows as well. So I've got some important technical factors that stop me from buying and also stop me from selling. So when that's the case, it's best to just sit on your hands and wait for further development and a better opportunity to arise. So if you can start breaking some structure to the downside, start taking out some lows, then that would tell me, okay, your USD might be reversing here. We've got a triple top up there potentially, and then we've got breakup structure. I will be looking at some pullbacks for more downside. So that's kind of what I'm waiting for the sell side of things, but also for the buy side of things as well. If the market starts to push up again to the upside, if you can break above the high here, solid retest that level, I do think we can catch a nice bounce to the upside and keep that trend going, because it's still alive. We're still seeing momentum across most major time frames, weekly, daily, 4H. We're still seeing bullish momentum, but a lot of signs that the market might be looking to topple with those 3 rejections there. So for me, it's just a waiting game for Euro USD. See if we break through the highs, get the retest, continue that momentum, or we start breaking some structure to the downside and we look for the sells and we start looking for the reversal. And right now we're just in between. So we'll be patient and wait for further development. Pound USD, similar price action as well. Pound USD, the setup I came into the week with was these 2 levels of support resistance drawn, and I'm saying that if price can break one of these 2 levels, that's when I will become interested in pound USD. If you start breaking to the upside, that'd be fantastic. If you start breaking to the downside, that'd be fantastic as well. The reason I'm not looking to trade within the range, number one, I don't trade within ranges. I'm just moving outside the screen there. Number one, I don't trade within ranges, and number 2, we've got this massive daily level here, and I don't really want to be looking to buy or sell in that area because it's so sensitive and it's very, very speculative. You can see the market's breaking above it, breaking back below, catching a lot of traders on the wrong side of things here. I'm waiting for the market to start really following through in a particular direction, whether that's to the upside. Now I'll be looking for the pullbacks going up, or if the market's just having a big fake out above the highs of this resistance here, then soon come it might start dumping to the downside. If that's the case as well, then I was looking to be shorting these lower highs there as we go down. So that's kind of what I'm waiting for pound USD. Price action in here is consolidation. Like I said, I do not trade consolidation. So I need pound USD to commit in a direction, and then we can start looking for some really good setups and following the trend in either to the upside or to the downside. Doesn't really matter. I'll take a look at the S&P. USD CAD. Okay, we'll take a look at USD CAD as well. Yeah, it'll be up 250 on your JPY with what I just bought on paper. Yeah, but again, it's all theoretical. It depends how much you're trading with on your live account as well. And sometimes on your live account as well, with the news, you might have closed the trade out of fear that you're going to take a loss. You wouldn't have done that in the paper trading because if you take a loss, it's not really the end of the world. There's no attachment to the money in the account because it's not real. But in the live account, it is real. that money can actually buy something tangible for you. So you might close that trade out of the fear that the news might give you a stop loss. That's another question you don't have much experience in, which is why trading a live account is very important, even if it is just a small one. Okay, so S&P US 500. So yeah, this one I'm looking at some more downside for S&P. We're starting to topple out at these highs here. The market came back to that resistance not too long ago and starting to fade at the highs. Yeah, it's not particularly the biggest rejection in the world, but it's a sign that the market is starting to fade at the highs. So S&P is at a crucial area in the higher time frames. Looking at the 4H and the hourly time frame, I'm looking at some short-term sells around here. The market came into the highs, into the daily and weekly highs here, and since then has been printing these lower highs. So I'm looking at a pullback into this area and some more downside back into the same support, just kind of continue that bearish structure. Had a really nice impulse to the downside. Now looking at the pullback, the correction, and another follow through to the downside. So S&P, I'm looking at short-term sells in terms of a longer play. I'm not too sure. Price is just at a very critical area where it could look to have a big collapse here, or maybe find some strength. I would have to lean more to the downside, but I wouldn't look too much into that until we start really creating some bearish structure. So yeah, S&P, I see some short-term sales back down to the support. It might go further. If it does, nice. If it doesn't, we can just take our profit around those lows. But yeah, I have to favor sales here for S&P back around 4110. I'll go take a look at USD CAD as well. Miko, are you available on YouTube or somewhere where I can follow you? Yeah. A1 Trading and Trading Nick are dropping some links to my channel. Feel free to check it out if you want to. But yes, I do also have my YouTube channel. Okay, so which pair did I say I was going to do? Complete for USD CAD. Where is dollar CAD? There we go. So yeah, USD CAD interesting. Obviously, we've seen some dollar strength, and USD CAD. When there's dollar strength, normally is heading up, but looks like CAD is fairly strong. It's holding its ground a little bit too, and dollar CAD is just consolidating pretty much. So I wouldn't really touch dollar CAD right now. It's had a really strong move to the upside. Naturally, I would expect retracement, but it's not a high probability trade to sell. I might expect retracement, but am I willing to trade it? No, that's a different question. So yeah, USD CAD's at a nice level of resistance, around this area here. It's had a really big move to the upside, breaking some structure as well. So I would imagine it could be some time for it to retrace, but the price action is rubbish, and I'm not really seeing a lot of confluence here as well. So USD CAD, I'm looking at a bigger play for this one. If you zoom out, look at the higher time frames, you can see the market is very, very consistent with all these higher lows. We've been in an uptrend since this low here, 20th of May, 2021. And that's almost a year ago. And the market is very, very consistent with these higher lows and still is printing higher lows there on the daily too. So the way I see USD CAD playing out on the daily time frame is that most likely we're probably going to see another move back to the highs here. So I'm actually just waiting for good buy opportunities for USD CAD. I'm not really interested in the sells. There might be sells coming up, shortly, but I'm hoping we can retrace, find a high low somewhere, and then start buying to the upside again. So a couple of areas of interest I have is this area here, retracement into this zone, 1.355. I'll start looking at some long opportunities, and this consolidation slightly further down around 1.348 there as well. So personally, I'm just waiting for the buys. I'm not really interested in shorting USD CAD. That might be the play of the next day or two, but it's not the play for me. And yeah, it's kind of just moved sideways, so I would vote against it. So yeah, that's kind of my outlook for USD CAD. I'll take a look at pound CAD as well. DXY going against Euro short term, but Euro is confused. Yeah, Euro is in the tight little space. Euro USD that is in tight little space. So once that starts committing to a direction, then I'll start probably start actually looking to trade it. Because right now I'm just kind of just sitting my hands waiting for Euro to do its thing. It's still quite bullish, but it's coming to some highs and starting to fail. So we're getting some strong signs from both sides of the party, from the bears and the bulls. So I'm waiting for an overwhelming amount of evidence that the market will either go up or go down. And like I said, if it's going to go up, we're going to see a break of that resistance, simple break and retest. Of course, nothing's 100%, but at least we've got a lot more wind in our sails at that point. And same thing with the sales, the market start breaking some structure. And obviously, we know that the high probability that the market is going to continue going down. So at that point, so looking at some healthy pullbacks, retest some prior lows, then we can start looking for some entries to take it short. Pound CAD sales we're going to take a look at. Pound CAD, last time I looked at Pound CAD, that was just flying to the moon. Starting to retrace now, but again, I would just be staying away from Pound CAD. Maybe there could be some counter trend plays. Actually, this is a decent zone. I didn't notice this zone before. It's a nice zone there. Price support, market absolutely plummeted through it. Now it's coming back to retest that area, and the market is quite overextended as well. So that's another reason why we could retrace. So it could be some nice counter trend plays, but if I'm going to trade counter trend, I need to see the market at least create some bearish structure first. Some lower lows and some lower highs. Right now, we're kind of just consolidating here. If I whip out the old consolidation, as you can see, we're kind of just consolidating there. If the market can start committing to the downside, start giving us some lower highs to trade with, then yeah, there could be some nice shorts going down on these pullbacks on the lower time frames. But yeah, the market is still definitely bullish, so I would not try and push those trades too far, because it might just be counter trend play. Take a bunch of retracement from a higher time frame zone. We might just form a higher low and then start, ripping to the upside again. Because quite frankly, we're seeing bullish momentum in the 4H, we're seeing bullish momentum on the daily, we're seeing bullish momentum on the weekly as well. So yeah, the buyers are definitely in control of Pound CAD, but we might see some short-term sells which you can capitalize on, maybe on like the hourly 30-minute time frame. But yeah, if we can break out the consolidation to the downside, maybe there could be some sells. So keep an eye on that for Pound CAD. At around 1.7, that's a big psychological level as well. 1.7. Okay. Oh wow, it's 2:30 already. Okay. So yeah, we'll come up to the end of my segment. I didn't realize. So yeah, thanks so much, A1 Trading Nick, for having me on the stream. If you guys want to check out my channel, feel free to go and check it out. There's a link in the not description. There's a link in the chat that the guys have left, so feel free to go and check that out if you want to. But yeah, thanks so much for having me on the stream, and I'll pass it over to the next guest.
Hello guys. So let's open up TradingView. Just give me 1 second. So how's it going? If you guys have any questions, just put them in the chat, and I will answer all of them, or any analysis. We will take a look. So I was in a trade just like a couple of minutes ago, I believe. So let me run through that. It was on EJ basically, and it was a short, and unfortunately I got taken out by news. So let me give you the analysis from here with a 12 pip stop loss. So what I was seeing, I like ascending and descending structures. So I was seeing this ascending channel right here. I was seeing this ascending, and then I saw momentum shift to the downside. I saw 3 consecutive red candles, so that's a very good sign momentum is to the downside. Placed a pending short order, and the next candle tagged me in, and the spread just widened a huge amount, and I got taken out for even more than my stop loss. I think I got taken out for like 1.5% loss instead of 1%. So yeah, not a good day, but it happens. I mean, it does happen. So yeah, great to see you guys again. So Euro JPY, yeah, we're just now doing Euro JPY. So you also got taken out by news at break even. Okay. Basically, yeah, with this candle, this one right here, the spreads widened a huge amount, and it can happen. I mean, it never happened to me that it took me out for like more than 1.5%, but this time it did. So definitely a first time experience, but what you're gonna do, we move on. Sometimes news can actually push the trade in profit. This time it took me out for more of a loss, so it's a yeah, it happens. Okay, So you guys want gold? Yep, let's do gold. My profit for today. So today I'm down minus 1.5%. So that's today's. Let's do gold. Okay, for gold, the strategy I trade doesn't work. So I can only give you my analysis in a perspective from a trend trader. And from a perspective of a trend trader, this is basically very, very range bound. So I'm seeing a large range here, and I would not touch this with a stick. So I would just stay away from this price action. What you can do if you're a range bound trader is, well, you can buy the bottom and sell the top of the range. So that may be a play. As I said, for me personally, I would just look for a trend to start to the upside or to the downside. So I would be a lot more patient in this scenario. Just be careful of these areas. So these areas are full of stops because most range bound traders do put their stops in these areas above these huge wicks, below the wicks. So yeah, just be careful here. If you see a push into these areas, just make sure you wait for a continuation. So just make sure you wait for a continuation. Otherwise, stay out. Price can just break and retrace. NAS 100. 100. Yeah. Okay. See, I think this sticker should work. Pepperstone. Okay, this one, yeah, I'm trading only Forex, so only these 6 pairs live. Anything else, I really don't have deep knowledge. But again, I can give you my perspective as a trend trader. Not really showing me a trend. It is forming a nice pattern, which for my strategy is called the V reversal and the range. But for retail traders, is the same thing as, it's basically the same thing as a cup. So this would be the cup, and this would be the handle. What do we expect after we see this sort of a pattern? Well, we expect a push up. Usually price continues trending to the upside, and this is where I look to get in on the pullback, either on the flag or on a nice break and a retest. So yeah, this one I would wait to get that push. I would wait for a push up, and then I would be looking to buy. But of course, do keep following your plan. Overall, it's looking very corrective, looking very, very choppy. So I'm just seeing very choppy price action. Euro NZD, sure, we'll take a look. Just let's finish this segment. So what I'm looking for is large legs down, small pullbacks. Large legs down, small pullbacks. So this is the type of price action that I like to see. This price action is very, very, I would say, corrective, too corrective. Okay, so Euro NZD, XCM. Okay, so this one I don't trade live, but it's a Forex pair, so it might be a bit easier for me to do the analysis. Basically, it's moving down. Oil, just give me a ticker. Just give me a ticker for oil, and we will do it later, no problem. This leg is not giving me conviction. So what I want to see legs that look like this. Consecutive large blue candles. So that's a good example. That's a good example. That's a good example. This will also be a good example. So what you see in the move down is not giving me much conviction of momentum, because trend trader, momentum trader is kind of similar. So breaking and retracing on the bottom, when you see that sort of price action, usually indicates a descending channel, and usually after a descending channel, such as this one, well, you expect the price to reverse to the upside and start trending in the opposite direction. So I wouldn't be surprised if this started trending to the upside. I expect it because of the descending. That's what usually happens when you see a descending. Okay, yep, we got the ticker, USO USD. Okay, let's do 8 cap. It's not looking that bad, actually. So I'm seeing large red legs. It's looking okay. This leg is good. This leg definitely seeing momentum, and of course in the final leg as well. What I don't like is I don't like this momentum shift. So blue candles, momentum going up, very big blue candles. So that's not a good sign that the sellers are fully in control. But again, overall structure, it is moving down, as we can see. So I would look to sell. Did we break the low here? Let's see. Low 060, low 080. US dollar JPY. Yeah, sure, we'll take a look. We didn't break the low, so this is still a pullback, and according to my strategy, I would have gotten in on a flag here, so this would have been the entry for the flag. Maybe this size stop loss, something like that. So looking good. I would look to sell, but of course, do keep following the plan. Okay, I got lost a bit here. USD JPY. Okay, let's do USD JPY. Oof, this one is looking corrective, to be honest. So as a trend trader, only thing I like here is the live candle forming right now. That's the only thing I like at this point. So this is very, very corrective. And just sort of a descending channel, but also look at the wicks. With the Japanese pairs is the key. Well, the key is the wicks. Huge wicks to the upside, huge wicks to the downside, huge wicks all over the place. That signals a range-bound market, and it's not a good sign, not something you want to be seeing. What you want to see is something like this. Or like this. Look at this move. Absolutely minimum number and length of wicks. So that's what you want to be seeing when the price has cleaned up. That's also a telltale sign that the price has cleaned up and that you can look for a move. So to look for a trade for me personally, I don't trade this one live either. I would look for this to continue with the momentum and then look for a pullback or a break in the retest trade, flag trade, so whichever one happens. I would like to see this close solid and then the next one also continue. That would show me 3 consecutive strong blue candles, and that's a good sign that the momentum will continue to the upside. So that's my analysis for UJ. Platinum, silver, and copper are very good markets to trade on. So I stick to Forex. It's enough for me. 6 pairs. These are the ones. I mean, that's more than enough to watch out for. So I don't need any more work, I would say. For now, at least. Maybe in the future, I'll check out some other instruments. Okay, dollar going up. Yep. Looks like dollar is gaining strength. AUD NZD. NZD. Okay. This one going down, but correctively. So you can see the momentum here. It was looking okay. We saw some momentum here. But then look what happened on the bottom. We started breaking the lows and retracing. When you see that sort of price action, when you see breaking the lows and retracing, it's starting to show a slowdown in momentum. And it's an indication that the market will either range, but most likely it will actually reverse in the opposite direction. So I expect this to reverse up. And I expect this move to be done. So this move to the downside, I think it's actually done. I think it can no longer be sustained. Huge wicks, huge wicks, huge wicks everywhere. That's how you also know that the market cannot be sustained to a downside anymore, at least on the 1 hour chart. SPX 500, so let me see if there's a ticker. Okay, let's do 8 cap. SPX, this one, again, we had a move down, but it can no longer be sustained. So push down, break the low, retrace, push down, retrace. Also seeing a potential slowdown right here. So expecting this to reverse in the opposite direction, but I need to see momentum. So I wouldn't do anything until I start seeing some consecutive blue candles going up. So I need the confirmation, of course. Okay, is Forex going to stop 2026? I don't think Forex is going to stop in 2026. So you're always going to have currencies, and it's just how the markets work. So you're always going to have one country battling it out against another country. So for example, US dollar, JPY, America versus Japan, or US dollar, Euro, US dollar, Europe versus the US. It's always going to happen, and you're always going to have these movements until, of course, they phase out these currencies, and maybe there will be some new currencies. Maybe cryptocurrency will take over. You never know. But then, of course, you can apply these concepts to cryptocurrency. So there's always going to be stuff to trade. Even if the currencies won't exist in the next 100 years, there will be maybe stocks, or you can trade maybe crops or oil. Not oil in 100 years, but you can trade electricity. You can trade absolutely anything. So the skills you know as a trader can be applied to any instrument. As long as you have your strategy, developing the strategy, risk management, and psychology in your head, you can apply that knowledge to any sort of instrument, so don't worry. If Forex stops in 2026, we'll just move to some other instrument. Okay, hope that gives you a bit of confidence. GBP AUD. PAUD. CM. Okay. This one looked really, really good, I have to say. So, oops, just lost the screen. We had this ascending channel right here. So let me get the chat back up. Where is the chat? Okay. Ascending channel, which is not a bad sign. And as you can see, it doesn't have to reverse after an ascending channel. Some pairs are known to actually go to the upside after an ascending channel. Looks like this is one of them. I don't trade this one live either. But again, what did happen on the top? Well, can be hard to spot, but all of these highs were broken consecutively. So all of these candles were moving up consecutively. And then this candle paused. And then we broke the high and retraced. So that's a telltale sign that a small ascending is forming on the top and that the price cannot be sustained to the upside. So when you see something like that, I expect the price to reverse in the opposite direction. So I expect this to happen. That's why I would not have entered on a flag here, because I see a flag that form. It would be invalid, but we'll just spot it out. Okay, this would be the flag. If this didn't exist, if this was all part of one move, this would be the first high, first low, second high, second low. This is the entry for the flag. So, yeah, I'm seeing a break of structure and I don't like it. I expect a range here, to be honest. Okay, USD, CHF. Yep, let's take a look. Okay, we're seeing momentum, so that's a good sign. Prior price action, large descending channel, I have to say. So here we had a large descending, after which I expect the price to reverse in the opposite direction. And now seeing some momentum. So looks like we have a push up, small pullback, push up, pullback, push up again. I would look to buy here. I would look to see another candle like this, and then I can look for a nice flag or for a nice retest of the most recent highs. So I like this pair to go long. I like this pair to buy. All depends on how this candle closes. If it closes blue and right here on the top, I expect the momentum to continue. If it closes red, then we have double wicks on the top. Double wicks are a very bad sign, especially huge double wicks. After huge double wicks, I expect the price to reverse in the opposite direction or to the downside. Usually on most pairs, huge double wicks are a sign of a reversal. How to learn something like that? Well, you go back, you see what happened on the bottom, see what happened on the bottom, see what happened on the top, and in these reversal points. So you can see double wicks, price kind of went back up. Double wicks, price went down. Double wicks, price went down. Double wicks, price went up. Double wicks, price went down. So you can see double wicks are a major indication of weakness and a reversal. Okay, so yep, no problem, bro. No problem, Killian. AUD USD. Yep. Now that's the one I trade live. So let's take a look at AUD USD. Okay, for this pair, right here I was seeing a nice descending structure, after which I did expect the price to go up, to be honest. So I did see this descending after a nice move. So we had momentum here. And then we started descending, after which I expect the price to go to the upside. I was expecting something like this. Unfortunately, that didn't happen, so we broke the structure, broke the high, and we printed a huge wick as far as I remember. Yeah, so not a big wick, after which I wasn't happy to look for longs, and then we got momentum down. So we got this red candles momentum going down, which I definitely didn't like as well. So right now I expect a range here. I expect a range. We tried to push up. We did try, but it didn't work. So 3 possibilities after a descending channel. Most likely we will go up. We can also range or we can go down. We did try to go up, but failed. So I expect a range. I expect a range here, and I would look for a large impulse up or a large impulse down in the next week. I would look for the price to clean up a bit. Okay, GBP NZD. Okay, I think we did this one already. I don't even remember. Maybe we didn't, so we will do it now. I don't trade it live, but basically what I'm seeing is momentum, small pullback, we continue. Small pullback, but cannot be sustained. So same sort of thought process, expecting this to reverse up, especially with this signature of momentum. Right here, I'm expecting this even more to push up because I'm seeing buyers step in. So by just looking at these 3 candles right here, this one, and this one, I can see buyers have come into the market. So possible reversal. Possibly it will form a V reversal in a range or a cup and handle, however you want to call it, to break this level. And then if it does break, well, I would look to buy. Okay. Any other requests, guys? Just put them in the chat. Any questions? Don't be shy. Let me quickly then run through my 6 pairs, and if I see any questions pop up, I will definitely take a look. So for the analysis of Aussie DCAD. Okay, cool. Let me just do EU and then we will do Aussie DCAD. Aussie dollar CAD, yeah. This one is range bound. So I'm seeing momentum trying to push down, but cannot be sustained. Don't like it. So EU, I'm expecting a range. Expecting a range right here. And I would, in the next week, look for a large impulse up or a large impulse to the downside. Aussie DCAD. Okay, range bound. I think Aussie DCAD is range bound. I'm seeing a descending structure after which I would expect a reversal up, but we failed. And we're just breaking the highs, retracing, breaking the lows, retracing. So why did we fail on the reversal? Look, buyers tried to step in with the blue candles, but then sellers quickly got back in and pushed it down. We broke the high, weakness, rejected, broke the high, triple wicks, we rejected. So I'm seeing clear weakness and now definite sign of sellers. So the buyers and the sellers are battling it out. There's no clear winner. Markets are range bound. Do you think technicals hold on a lower time frame like 15 minutes? I think they do. I know a lot of traders that trade purely technicals on the 15-minute time frame, even on the 5-minute time frame. So it's not about the technicals, it's not about the fundamentals. Everything works. ICT works, smart money works, price action works, indicators, yes, I think even indicators work for some traders. So it all works, but it's about psychology. It's about sticking through the drawdowns, the huge losing periods, the bad months, the quiet months, the negative months, the break-even months. So that's what most people cannot do. They cannot stick through the bad periods, whichever strategy it may be. So it's not about the strategy, it's about the psychology, it's about sticking through the losses and the bad periods until the good periods or the winners come. Of course, you need to backtest the strategy and see if it's profitable in your backtesting, and you need to forward test it as well, meaning you need to trade it on a demo on a small live account for at least a few months. But again, learning a strategy, not that hard compared to actually executing it for a year, 2 years, 3 years, when the psychology kicks in. So don't be worried too much on the technicals, but do be worried about trading psychology. Okay, GBP, JPY. Okay, GBP, JPY. Check it out. For GBP, JPY, I'm seeing, well, nothing much, to be honest. Nothing much. As a trend trader, this is range bound to me. So even the overall price action is range bound. Also wicks everywhere. So I'm staying away. I would stay away from this pair if I was trading it live. Look, wicks, 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 wicks. What I'm looking for, let me try to find what I'm looking for. This pair does not look good. Okay, this. I'm looking for this. These types of legs. Clear momentum, which I can look for small pullbacks and then get in. Here, not that good, but not that bad either. Maybe one more example. This pair looks very corrected. We have some drawings left over. This, for example, leg up. Oh, this is good. This looks clean. This right here is what I'm looking for. Consecutive blue candles, not a lot of wicks. So that's what I want to see. Okay, I always have a big problem on taking profits. I'm in a winning trade and then I lose my profits. Well, that is why you need to have a trailing stop loss rule or a fixed take profit of, let's say, 5-1 take profit. Just backtest it, but just have either a trailing stop loss or a fixed take profit, which eliminates emotion, eliminates discretion. It's always the same. Just keep following the rules and you should be good. You should be able to take profits every single time, because when you have a, let's say, discretionary take profit, that's when the problems come, because you may take profit a bit too early. Sometimes you may leave the trade running, then it goes back because you didn't take profit early enough. So that's when the problems come. I would say have a mechanical approach. To quickly summarize the pairs I'm trading live. EU range bound, EJ range bound right now. Let's check out AU. AU range bound as well. Right here, the reversal failed. AJ, not looking that good, but possibly will reverse. Possibly will reverse after the descending structure. So still has potential, little potential, but potential nonetheless. Pound, range bound, also possibly forming a V reversal in a range. But as for this week, just nothing. NJ, we did have a descending which should have pushed the price up, but we kind of broke the structure here. The sellers stepped in. The sellers definitely stepped in a bit, so that's what I did not like. So that would be about it. Hope you guys enjoyed, took value. Thank you everyone trading for the opportunity. Take care. My channel is Marko's Trading Journey. Check me out on YouTube, and I will see you guys in the next live stream.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.